Good afternoon, Alex Cole. February 18th, Thursday. How are you doing, my friend?
I'm doing well. We've got another snowstorm here, so we're going to be stuck in for a few days. And then I've got lots of shoveling to look forward to, but doing okay.
Better than the poor folks of Texas. Hearts going out
Yeah,
to all.
not used to it down there, no.
Yeah, exactly, exactly. Well, let's dive right into Flight Path.
Yep.
We set this out to subscribers on Monday. Let's take a look at what's happened so far this week, how some of those trends are playing out. Maybe just starting with right from the top with the asset class map. Just see what's working, comparing across all of our major asset classes.
Yep. So we sound a bit like a broken record, but the risk on theme remains the same. We've seen continued strength, continued go trends in the equities and commodities, of course, cryptocurrencies.
Hmm.
Took off again this week, early in the week, or even last weekend. Still seeing the dollar trying to fight and stay in uh, that that go trend. So that's going to be interesting and potentially the only thing that could derail what we're seeing in the risk-on assets, I guess.
Hmm. The market does have a way of making the most uncomfortable situation for the most amount of participants. So perhaps those dollar shorts are just getting a little pressure. But in the context of that overwhelming long downtrend, this still looks like counter trend correction activity, correct?
Yeah, I mean, if we look at the dollar chart, um, it's fighting. It's fighting to stay bullish. So let me go to a. I wouldn't. It's not roaring away to
Hmm.
anything just yet. You can see here. Here's the downward move. Here's the bullish activity that we've highlighted in the last few weeks. Came
Hmm.
right back down into amber and is trying again to maintain that go trend. But look at the oscillator riding the zero line. No new high yet in price. No rally into positive territory at all off the oscillator. So
Hmm.
it's trying, but yes, I think as you said, we tried earlier, more of a counter trend reaction, I guess
Hmm.
you call it at this point.
Let's jump out to a weekly chart for just 1 second so we can see the long-term view.
Yeah,
Yeah.
there's the long term since last June, when we went amber, and we've been making lower lows and lower highs, and really on the long term weekly, this looks like a lower high
Hmm.
and oscillator testing the zero line from below. All else being equal, you'd expect this to roll over and then
Hmm.
price to once again move lower, and even who knows, potentially set a lower low. So
Hmm.
yeah, in the context of the larger trend, um, the short-term dollar strength seems maybe just that sort of short-term.
Hmm. So for all of our listeners and subscribers, the importance of looking at multiple time frames is a great highlight right here. If you're looking too short term and you're seeing this rally without understanding the broad context of what the dollar has been doing for the last 8 months, you could get yourself into trouble. So let's move on from the dollar.
Yep.
Had a really interesting chart. Obviously, um, uh, people raising cash, that's a signal that we might be moving to a risk-off regime. But the signals from the bond market certainly seem quite bullish. Yes.
Yeah. So if that's the only potential, tailwind or sort of resistance um, for the equity markets, the potential dollar strength. I'll put this back on a daily chart. On
Hmm.
the other side of the flip side of the coin, if we're expecting continued equity strength, this is a chart that really um, speaks to that in terms of historically, we know that rising treasury spreads between the longer at the longer end of the curve and the short to the shorter end, we know that historically a rising spread is good for stocks. And so
Hmm.
we're really seeing a fairly strong go trend here higher highs, higher lows consistently. I mean, look at that oscillator support, really, for all this period, really nicely finding support at the zero line. I
Hmm.
mean, right now a little overbought, and at the you could make this a trend channel, and we'd find ourselves at the top of the channel. So in the very short term, we could see a
Hmm.
pullback here, but yeah, the trend is without question is a go trend on this spread. People having more confidence in the future, right?
Sure. Yep.
Further out on that time horizon.
Yeah, so the macroeconomics lesson here is that you want the slope of the yield curve to steepen like this. That is a sign of the stock market as a leading economic indicator that there is an anticipated return to growth in the domestic economy for the U.S. And as more COVID vaccines get rolled out, as businesses reopen, there's still a lot of Americans who are in the service sectors that have not gone back to work. Obviously, restaurants and bars and entertainment spaces are not reopened in most states. So this is a little look at maybe what is to come as we move into the spring and summer. But we've seen some analysts. I know there was an article in Bloomberg this week just about the parabolic move in the yield curve that could be cause for concern as it
Hmm.
relates to inflation. So what they're talking about there is, as Alex just pointed out, we've got a nice trend channel. If you threw another trend line on the top of that, we're at the higher end of that. Doesn't look like cause for concern in the way that the media personalities portray rates really taking off. And if rates were to go parabolic from here, really leave that trend line and move in an overexcited way, that would tell you that there's anticipation for inflation, or many analysts would be worried about inflation, which, again, stepping down multiple steps, if the Fed were to tighten in order to curb inflation, that could be a rough shock to the equities market. Doesn't look like any signs for that on the 10-year, 2-year, on this yield curve. Certainly, there's a lot of talk about the 30-year rates as well. But no signs yet of really explosive or extreme activity from the bond market. This just looks like anticipation of good news to come.
And that's just it. I mean, and to me, that's the beauty of technical analysis. It's of course at some point when rates rise too high and too quickly, then that will put inflationary pressure on the economy and the markets. But when will that happen, right? And
Hmm.
and that's the question, and that's where technicals come in for me and for a lot of analysts, because until that happens, the trend, we can continue to analyze the trends and look at the markets the way we do. Yeah, at some point, rising rates could become a problem, but that could be in 2022. Could be,
Exactly.
we don't
A
know that
great
now.
great technician named Marty Zweig said, "You just don't fight the Fed."
Don't
And
fight.
so, anticipating a move from Jerome Powell or the
Yeah,
central bank to tighten rates, that is a fool's errand. We
yeah.
can watch how they move their feet, not how they move their mouths, and we'll see it right on the chart. So,
And that's all in the CMT books. His rules. One was don't fight the tape, which is
yep,
price, and
yeah,
another was don't fight the Fed. Yeah, absolutely.
wisdom from those who've lived through many more cycles than we have, despite my
Yeah,
receding hairline. Well,
and
let's
the green bean.
that's right. A little bit of gray, a little bit more forehead.
Yeah, I've got
Let's
to sit this. I got to sit this way because there's less gray on this side.
it's good to learn those expensive lessons on somebody else's dime. Read as much as you can. All right, well let's move on to the main theme of this week's research, which was knowing that the asset class heat map was telling us equities are in a strong go trend. We wanted to look around the world. Tell us a little bit about this rel map, Alex.
Yep. So this is a go no go rel map, meaning simply that it's taking the assets that make up the panels below and looking at their relative strength to a base, which in this case is the S&P 500. So
Hmm.
let me make sure this isn't confusing because I got Bitcoin on the top here. But make no mistake,
I
this
didn't
is
even notice that.
This
Very
is
good.
not each index to Bitcoin. Although that might be the way we go in the future, who knows? But right now, this is each index to the S&P. And
Wonderful.
so the idea is when you look at the relative strength of a security or of an asset,
Hmm.
where you can get a lot of information when that relative trend is a go versus a no go, because we could easily say that, yeah, equities are in a good place, but are all equities around the world, the global equity indices, performing as well as each other? And
Hmm.
clearly from this relative map, you can see that they aren't. We've got a nice mixture of no goes, those
Hmm.
purple colors, really concentrated in Europe. You see the top panel is the UKX, then you've got the DAX, and you've got the CAC 40. Um, the Europe is underperforming.
Hmm.
But then if you, and say same with South America, down the bottom we have the Bovespa. But if you look in this middle area of the chart here, these are the Asia Pac emerging markets. We've got the Nikkei, we've got um, the Kospi, the Nifty in India, and those are all in relative go trends to the S&P. So the S&P is really doing well, but
Hmm.
looking for even more alpha, then look at these relative trends.
So let's dive into just one of these. If you can, for our viewers, pull up the relative ratio chart of the DAX to the S&P. Um, and so the DAX might, thinking about a relative map, you might be in an absolute go trend for any one of these indices, but on a relative basis, compared to the U.S. markets, they are underperforming. So there's a look at DAX to S&P. It's just been a continued downtrend since the end of the summer, where the U.S. has really outperformed uh, the DAX.
Yeah. Did you
Yep.
want the heat map or the ratio itself?
Just the ratio itself. And then there's the DAX index. So on an absolute basis, right,
Go.
we're seeing a go trend, but as investors, you want to be positioned in leadership, right? If you're looking for outperformance, if you're an institutional portfolio manager or a self-directed investor, you want to buy what is leading the market higher.
Right,
So,
absolutely. So here's the DAX on its own. This is just the DAX, and you've got a, like you said, a go trend. But
mhm,
if you eyeball it, maybe you can quickly see that the go trend in the S&P is stronger. But if you
mhm.
look at the relative trend, like sorry, I thought you might mean a single panel map, but if you just look at the relative trend of that ratio,
Correct.
you can see that it's moving generally down, and especially in the recent few months,
Hmm.
underperforming the S&P.
Perfect. I think that's a great explanation, Alex, and for our viewers and for our subscribers to GoNoGo Charts, this is what we're looking for, right? Trend following is great, and you can find trends all over the place, but not all equity indices are created equal. And so, if you're finding those that are leading on a global basis, on a relative basis compared to the rest of the indices around the world, that's where you go looking for ideas. And that's where you look to be positioned. So let's talk about the good news rather than the bad news. Our poor European colleagues have a little ways to dig out, but looking at those high growth sectors, the Shenzhen, the Nikkei, Japan just placed a 30-year base, if I'm not mistaken, on the Nikkei. That's
Yeah,
incredible. 30
if we look at
years.
30 years, take 30 years to get back to, it just goes to show that, it isn't all the same. I mean, imagine if it had taken 30 years for the S&P to set a new high. We don't
Okay.
appreciate that kind of length of time. We just
Yeah.
think that equity markets go up, but that's why it's good to look around the world. So yeah, so the Nikkei,
Japan had to unwind a very, very large bubble. But what a bullish statement
right?
for global investors that Japan is now breaking out of a 30-year base.
Yeah,
That's
yeah.
exciting.
And if we look at that on even a monthly, you still have
Good.
to go back further than to see that. But
It's
here's
incredible. Yeah.
there it
There
is.
was,
There's the monthly.
yep.
So it's been breaking out of this these resistant levels
Hmm.
in here, and there we go.
There was, yeah, still a lot of overhead supply. Took 30 years to work our way through folks who were still trying to offload their Japanese positions.
Yep. But in the short term, like you said, what good news? And in the short term, this is the trend. Very
Hmm.
strong. Um, Oscillators being supported by the zero line, uh, rallied to new highs earlier this week, and now, you know,
Hmm.
trying to stay up there.
So in a healthy uptrend, Alex, you're looking for some consolidation or corrective behavior as the index or security continues to move higher. And so tell us just a little bit the relationship between GoNoGo trend in the top panel, the price panel, and what's happening with the oscillator when it breaks down to zero.
Yeah. So this is really one of the most most important, I think, aspects of these charts is that we know, or at least, we should know, right, that a trend doesn't move up in a straight line, and that
Hmm.
within a strong trend there will be corrections. It's that idea from Charles Dow of the market moving in waves. However you want to look at it, after a significant move up, there will be some sort of price consolidation, either sideways in the form of a rectangle or counter trend corrections, can be flat triangles, any number of ways to describe them. But
Hmm.
what we want to see in momentum is that when you have a significant rally like we have here, we want then this consolidation period to be healthy. And so what do we mean by healthy? Well, if this was too significant of a consolidation, or this one is sideways, but if it was correcting too much against the trend, then you're worried about the strength of the trend. The correction should be enough to be healthy, but not to ever cause the oscillator really, in theory, to go into negative territory, because that would mean that the inputs to the oscillator, some of them are becoming oversold. So an
Hmm.
oversold condition on an oscillator means that there's very heavy and aggressive and enthusiastic selling, which
Hmm.
when you're in an uptrend, that's counterintuitive and you wouldn't expect that. You would expect enthusiastic buying and then some cooling off, and then enthusiastic buying and then some cooling off. But if you go from, enthusiastic buying to really enthusiastic heavy selling, that's not the healthiest of scenarios for an uptrend, and you may well find that that trend is short-lived. So what
Hmm.
we look for in the go-no-go chart is that when the correction or the consolidation happens, the oscillator will fall to zero, meaning that all the inputs are in neutral territory. But it shouldn't, ideally, go below zero. Now, it does here briefly, it sort of um, teases us a little bit by going into negative territory, making us really concerned at this point, especially with the paler aqua color of the trend indicator.
Hmm.
That's saying, okay, this consolidation is maybe a little bit too long or a little bit concerning for a healthy uptrend, but very quickly it reversed and goes above zero. And then you see the same thing play out here. You have a nice sharp rally, and then you have a move against the trend, but not enough to push the oscillator below zero. And it rides the zero line for a while before finding support and bouncing off zero, leading to, again, another relatively sharp rise. So
Hmm.
that's really what we're looking for. Every time the market corrects, we want to see if the oscillator finds support at zero, because that means that the momentum, although having cooled off, hasn't gone into oversold territory. And then when we see that rally off zero, that's really an indication that momentum is coming back in the direction of the trend. And that's
Hmm.
when we highlight this on the chart with the green icon. We could, the ones we call the low risk entry or trend continuation, because
Hmm.
you've got more enthusiastic momentum and buying in the direction of the trend. So that's how the two play together.
So if that's a Peloton workout, when the trend ends, that's when somebody like me just falls off the bike, passes out from too much workout,
And
as
you put it
opposed to
in a garage. You put it in a garage sale. It's too enthusiastic. You're selling off your Peloton.
that's
I
right,
mean, just if you want to see a quick
a
Peloton,
healthy uptrend.
we can do
Yeah,
that
why not?
right back here. Um,
Look at that.
Peloton throughout the throughout the pandemic from April. And what you want to, you highlight here, the rally, the correction, but holding the zero line. Rally, correction, holding the zero line all the way through. Rally, sideways correction, holds the zero line, goes again, holds the zero line, goes again. And now this is the flip side of why that's so important, because when it doesn't hold the zero line, now as somebody that's a trend follower, you say, okay, I made my money on the meat of this trend, right? I didn't get in at the low and I didn't get out at the top, but I was in the trend for a significant portion. And now we say, you know what? We're struggling to hold the zero line. We're going to pay attention to the price. And then it starts to struggle much more. And at this point, as a trend follower, maybe you've moved on to look for a new trend.
And there's your importance of risk management, right? So you have the change to aqua bars, right? So we've had a weakening in the strength of the trend conditions,
which is normal. That weakening to aqua should happen in all of these corrections, but it's that get ready just in case.
Right. So we're keeping an eye on it. Then the oscillator breaks through zero. Now it's violated another one of our rules. We know that the strength of that trend is no longer as it was for those several months. And then we've got these amber bars. Alex and I have been calling those affectionately the go fish bars. As Jesse Livermore said, there's a time to go long, there's a time to go short, and a time just to go fishing. So the trend hasn't found its direction. You often see those amber bars in between periods of directional trending. So there's three warning signs, right? If you're thinking about building your list for what are the criteria that you're going to use to help manage your risk, you want to capture those long-term trends, and then you want to be very disciplined about your exit strategy. So it's going to be different for each person. You might, at that point where the oscillator broke zero, maybe switch to a shorter-term chart and see if there's further weakness there on a lower time frame, lower periodicity. But here we obviously saw the no-go flag. That's got to be your final straw to exit your position, take some profits.
Yeah, and you can reduce position sizes too on any of those conditions as they stack up against the trend. But at the same time, Tyler, like we said on the dollar chart, what you may do is reduce your position or get out of your position here. But would you necessarily short Peloton as it corrects?
Right.
Yeah, most likely not. The larger trend, Peloton not being around for very long, is of course,
an incredible go.
It's bullish. So at these moments when you're looking at the daily chart, maybe you take some off the table, you reduce positions, you exit the trade, and then look to the larger time frame. Is it really is it something you want to short based on the larger time frame trend?
Yeah, social distance, healthy workouts in the safety of your home. That seems like a good buy.
Yeah.
Oh, looks like the youngest employee of GoNoGo Charts is here. All right. Must be close to dinner time. Let's go back to our global equities overview. And why don't we've talked a little bit about Japan and the Nikkei. Let's talk a little bit about Chinese equities. If you wanted to show the Hang Seng or the Shenzhen Composite.
Yeah. Let's do the Hang Seng first.
Sure. Wow. Look at that.
Yeah, that's the weekly. Oh no, that's the daily. Yeah, gee. Sorry, it was so overwhelmingly bullish. I thought perhaps that was the weekly, but yeah. So that's
awesome. And remember, this is on a relative basis, outperforming the U.S., outperforming the S&P. So this is an extremely strong go trend for. Yeah.
I mean, just to put it into perspective, if you were to, since November, you're looking at a 25% rise, right? That's a really strong return on an equity index.
And we just rallied off the zero line again, and looks like trend conditions are looking for a little correction. We got that red. Yep, counter trend correction arrow
right here. And
excellent
again, if people want to know that the counter trend correction arrows are just signifying that there's been excessive buying in the direction of the trend, which isn't necessarily a bad thing, but it can, of course, lead to a cool off in the short term.
mm-hmm.
You and I have talked in the past about people that buy that kind of setup. You know, when something goes into overbought territory, that's very bullish because it's a sign of excessive buying in the direction of the trend. But when it
Mm-hmm.
cools off and comes out of those overbought territories, then that's when you can sometimes see a slight pullback. And so we'll
Absolutely.
be watching right now as we get that signal.
Wonderful, wonderful. Let's talk about two quick individual equities and just see how they played out this week. I know we were butting up against a little bit of resistance
Yeah,
for Alibaba, and
Alibaba.
let's
Yep.
yeah we can start with either BABA. There we go.
So Alibaba is interesting because it hasn't had the same kind of outperformance that we've seen from a lot of these emerging market major companies. Even Tencent, which was what I was going to pull up, has
Mhm.
has a much better looking chart. So this is an interesting one in terms of, are we expecting it to play catch up perhaps? Um, or is it struggling for a reason, right? But again, the same principles apply here. You've got, if you go back, you can see obviously it's done very well. And you've got the uptrend being supported generally by the zero line until it isn't, and
Mhm.
then the no-go. Now this move down being rejected by the zero line. That's the flip side of the interaction with the zero line, where in a no-go trend, then we expect the zero line to become resistance for all the same reasons, just in reverse. And so
Mhm.
when it wasn't resistance here and it was broken, we got the go fish bars that, as you said, are often a bridge between trends, and
Mhm.
then the goes coming back in. So a really important pivotal time, I suppose, really now for Alibaba, because we're at the zero line again on
Mhm.
fairly weak momentum and sort of weak volume as well, right? With that paler aquiline of the
Yep.
oscillator. And also you can see in here there's quite a lot of overhead supply that it's trying to deal with,
Mhm.
in this sort of area it's been support and it's been resistance in the recent past. So interesting
So
for
just
Alibaba.
yeah, just to unpack that concept of support and resistance. We humans are flawed creatures, and just think about the folks who took heavy positions right at these levels, and it's done nothing but work against them. Psychologically, how
Hmm.
grateful they are to be back even, right? They just want to be out of the trade without the loss. And so prospect theory is what the behavioral psychologists tell us drives humans to really avoid risk. And so a lot of traders, institutional or retail, they tend to hold a position until it gets back to that break even because it's so painful to take the loss. Now, as trend following technicians, we love our losses. We want to identify when we're wrong as quickly as possible to make those losses minimal. But right now, as Alibaba is dealing with that overhead supply, it's because we had buyers at these levels that are looking to exit positions. And once we break through that resistance, then you tend to see some directional price moves that are pretty enthusiastic
Yeah.
if the momentum is there to support it.
And that's when you tend to see that concept of polarity again, which we've talked about. If it is able to bounce off these levels and break above this overhead supply, that may well function as support going forward.
hmm
Uh, but yeah.
So from an asset allocation perspective, we've got fund flows going into the indexes for the Hang Seng. That could be a rising tide, which lifts all ships. Might be very good for Alibaba. Let's in closing, let's just take a quick look at Tencent for some happy news.
Yeah. Uh,
Boom.
Much different look for Tencent. Again, this here's the supply really at these levels,
hmm
um, but that's now gone. Right, there's a difference there in this chart, that it dealt with these levels, broke through on the oscillator, And this is a great chart just to demonstrate again the way we might use go-no-go charts. You're in a long position, and then the oscillator becomes the zero line becomes a problem, and all the way through here, even though this trend is a go, this is becoming a bit of a problem, and then we would be out of our position, and if nothing else, or if for no other reason, we've significantly reduced our drawdowns, right?
Hmm.
As the no-go was very brief, because again, it's in the larger picture we're in a bigger uptrend, but
Hmm.
we really reduced drawdowns if we didn't sit through that week's price
Yep.
moves against us, that volatility against us. So this is where a lot of people that we talk to will use the oscillator to just also reduce exposure to volatility,
Hmm.
not necessarily looking at a trend coming into place there, because the larger time frame would advise against that, but a way to reduce drawdowns. But
Hmm.
different from the Alibaba chart, it broke above some supply on heavy volume. Remember, we were just
Yep.
talking about how we'd like to see some volume. And the dark blue of the oscillator shows that we broke above this
Yeah.
level of supply on heavy
Surged
volume.
out of negative territory, broke through the zero line on heavy volume, then you
Yeah,
got your go signal. So again, you've got multiple criteria telling you this is a very strong trend, even before you've seen the breakaway price move. And
yeah, and
that's what go charts are there. That's what it's designed for. It's to get you
right.
in and keep you in for the full length of that trend.
And I think in the newsletter at the beginning of this week, I think we had this on here. We had it on a shorter picture,
Hmm.
and we talked about how this prior high, right, could cause some trouble, and and this last bar really just hit it and
Yep.
fell away. So
Yep.
we're seeing another situation now: consolidation, correction,
Hmm.
um, oscillator drop to the zero line. We'll want
Yep.
to watch this now, see if it finds support. Um,
Yep.
if the oscillator can rally strongly into positive territory, that probably will be enough of a push for it to get above the prior
Hmm.
highs that are at the moment operating as resistance.
Wonderful. Alex, this has been an absolute pleasure. Thank you very much for walking through Flight Path here on February 18th, 2021. Thanks all for tuning in. Feel free to subscribe to GoNoGo Charts for free on YouTube, or head on over to our site, gonogocharts.com, for more information. Thanks, Alex.
Thanks.